Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now, Captain Finance himself, Sully.
My, oh my, what a bloodbath today. Turn away from your computer screens. You can keep your television screen on today. But man, I wake up to an email this morning from Howie. Of course, Howie's in New York and we're in the West Coast. And he says, it's going to be a wild one today. And I looked and I saw the news all weekend long and realized that Japan had a tough run of it, and then you started looking at the jobs report last week, and then you heard that Berkshire Hathaway sold half its position in Apple for tax purposes. Timing was perfect on that. Let's bring Howie up to talk about it. Howie, how's New York City today? Are you staying indoors? Are you staying indoors so we don't have to take a look at what's going on actually on the actual streets of Wall Street? Because it's been a rough one today, man.
Yeah, I went out to see if there were any spare nets or trampolines I could go down to Wall Street and be a picks and shovels kind of guy. People jumping off buildings and so forth.
It's just one of those days. We haven't seen a day like this in a while. The stops are in, the curbs are in, all the circuit breakers are in to keep the market from crashing, which is what it's for. But as you aptly put out a couple of weeks ago, we've been at all-time highs for almost all year, and I think. What does this push us back to? What, May or something like that in terms of loss in value? And we're still up for the year.
Exactly right. That's exactly right. If you look at the S&P, we topped out of about a month ago at 5560 or 5660. Now we're at 5200 and change. That's back where we were in May. These are not crazy levels. The economy hasn't burned to the ground or anything, but it is a volatile move. It is what we were expecting. We've been talking about it on this show for weeks. The economic data, the difference between the Mag 7 and the general economy, the difference between the market itself and the actual economy. So this had to correct at some point. The catalyst for it is, like you mentioned, Sully, it happened in Japan. They actually rose interest rates, which were low for them still, while the rest of the world is trying to lower their interest rates. So that dichotomy stopped a trade where people were borrowing cheap yen and buying assets in dollars. And that was all unwound by the raise in interest rates. And that sell-off affected Europe, affected obviously Japan and Korea itself, all of Asia. And then this morning we see our turn down 4% in the Dow, 3% in the S&P, and Russell 2000.
Howie, is social media our friend in an instance like this? Because as Sully just said, hey, it's a snapshot in time. The dead cat bounce, we already talked about it.
It's going to happen. You'll see it in the next couple of days.
Right. Is it one of those situations where people are in contact with each other because of social media, where there's enough voices saying, okay, listen, it sucks, it happened to you, but we're going to get better. We're going to recover from this.
No, I think that's exactly right. I mean, the dead cat bounce is happening right now. So we started down 3-4. We're now only down 2.5, 2, depending on the index that you're looking at. But yeah, social media is kerosene for this stuff. It's an accelerant in either direction. When you have huge run-ups during COVID and people have money burning a hole in their pockets, yes, you're going to buy GameStop. You're going to buy whatever that guy on the internet told you to, and you're going to see these meme stocks burst. And then when you have a big sell-off, you have a general panic because people want to hold cash and they don't want to lose anymore.
Yeah,
they're taking off the table.
Well, I think let's continue here in a second. I'm going to hold you over for a second, Howie. But I think one of the things we have to realize here is that the market runs on two emotions: fear and greed. And fear is a big component right here. Russ used to say it ran on beer and weed.
Beer and weed.
It was a whole different story. But the long story short is we got to talk about why fear is a component, because no one wants to be the last to sell, as Howie always says. I'm going to let him explain that here in just a second. Big Biz Show, bigbizshow.com. Well, coming up, look away. Don't even look at your 401k today. There's no use even putting yourself out.
That's right. Hey, it's Devin Doan with the Big Biz Show, and instead of Howie today, I'm joined by my evil twin, Noved Enod. What's up? So on today's docket, Southwest Airlines is finally ditching the open seating policy after 50 years of tradition. A move that will allow the low-fare carrier to charge a premium on some of its more premium seats. What a concept. Personally, I'm stoked because finally there's just no excuse whatsoever to be standing in front of the gate 30 minutes before we're even boarding. Like, what are you doing? The airline said back in April they were considering a change to the 50-year policy due to increased pressure from activist investors who want to see changes in management and a little bit more profitability. Which, go figure, if you charge for better seats, you get more profit. Now listen, I'm all for it. Open seating hasn't even worked in Congress, so I don't know what you expect with a general population whose IQ is lower than the tire pressure on a bicycle. But are we surprised that it's taken a company who dodged a national glitch by running a version of Microsoft that barely runs floppy disks with the Oregon Trail on it 50 years to figure out, yeah, you can charge more for better seats? Reminds me a lot of the time when Sully figured out that you could just PayPal me instead of using writing checks, and the time that Costa figured out that he can order McDouble from an app on his phone. Anyways, I'm Devin. That's Devin. This is the Big Biz Show.
From the Loft 100 Studios in sunny Southern California. Not so sunny today, however. It is the Big Biz Show. Costa, Greg Todorov, our executive producer. That wonderful smile on his face. Of course, the man behind the bar, Sully.
Devin Doan.
Did he just take a shot at me?
Ah, no.
No, okay. I thought I heard
No.
Never mind. Oh, he lived.
What do you guys? How do you feel about that? I'm looking at my Southwest app, see if anything's changed there. Nothing's changed yet. How do you feel about that? I like that idea. I don't like the AB because I'm the guy who 24 hours ahead of time.
Yeah.
Will check in.
Oh, totally.
Trying to get the A1.
Yeah, right.
I've had A1 a couple times.
Did you really?
I had aisle 17.
And then what's so?
Why do you have aisle 17?
The exit row, right?
Why do you get the exit row on Southwest?
Oh,
of course, because the one seat's missing.
That's right.
Yeah. So you sit
extra leg room.
You sit in the center seat, and there's no seat to your right.
Yep.
You get all kinds of room. It's fantastic.
I love it. Although I do love the people flying to line up in front of the numbers to get on a plane and sit there then for the next half hour while they go through all the rigmarole and the oxygen mask stuff. So
Jared Coleman, our Emmy Award-winning director, had a baby just so he didn't have to wait in line anymore.
Oh yeah, that's right.
what a racket that is. Come on.
Why not just get one of those movie babies that look real? Just bundle them up.
Exactly.
Just get on,
Yeah.
Because you'd look like a kidnapper if you got on a plane like that.
I would, yes.
I wonder if that's done anything to Southwest stock symbol LUV. Howie, have you looked at LUV, the stock symbol, recently, to see if the Southwest has gone up because of that? Is Howie even still there? There is.
No, I'm definitely here. It sounds like a smart thesis. You have the rest of the industry doing something, and they have one practice.
I don't understand what was the idea behind that in the first place. Was it
Cost savings? I don't know.
Was it? I mean, it couldn't be convenience. Say again.
Chaos, it sounds like to me. When you have a place that's got to be so tightly regulated, every other step of your travel journey is kind of mandated how it's going to go. This is the line you stand in, this is your gate, et cetera, et cetera. Then you're going to introduce this competitive piece to it at the very end.
Yeah.
It seems like, fodder for Instagram fight videos.
Well, the thing for me is let's say you're holding B32, and the guy at B36 was in front of you.
Oh my God!
I was never going to say a word,
yeah,
but there are people that are.
Oh, what's your number?
Yeah, like.
Oh, I'm technically ahead of you.
And then your bags don't match where you're sitting.
Especially if it's like A6 or 7. Like, who the hell cares?
Right.
At that
I know,
point?
you're getting.
There's 6 people on the plane.
Thank you.
Yeah.
You're the first into Disneyland, man. Just go.
Do you know what the big bummer was when you had that A1 and you're heading for aisle number 17 or whatever it was, and it was a connecting flight. You get on the plane, there's already.
The worst.
Yeah.
Remember when they used to hand out the little plastic placards that said, B37?
Oh yeah. You're like,
right.
hello.
Yeah.
And then
You'd
they
wear
started.
it as a tie. You'd wear it as a tie. So
That wasn't a ticket full of germs, was it?
And then some would have chew marks on it, and you're just like, God, please.
Are you Howie travels a lot? In fact, Howie's even coming out here, I think, for next week. He'll be on the air with us in studio. For
Awesome.
A second. Are you when you choose your seat? Let's say whether you're first class or you're coach or business class or whatever.
Yeah.
Are you aisle person or a window person?
I am a window person because I am tired of sitting in the your aisle seat and
Well, because you got shoulders.
Yeah, either the cart or someone coming up to go to the bathroom.
I love when somebody getting on a plane with a backpack. Backpack that's this thick.
Thank you. God.
Boom.
Oh my God.
Right.
Or the minion in Coach who are coming up to use my first class bathroom. Don't they see that little net hold across? I mean, stay away.
So do you fly up in the leathers, Mike?
I do.
You like to fly up in the leathers?
I have told my wife.
So you save money to where we won't travel unless I can fly in front of
1,000%.
I have the same philosophy around concerts. I don't go to a lot of concerts.
No, I
before I
love
was
it.
in the business, I'd go to like 2 concerts a year if I could be in the front row.
I tell my wife,
I'm going to go to 2.
I don't want Christmas presents, birthday presents. I don't want this and this and
But
that.
I want to fly up in the leathers.
But please, when we fly, can we fly first class? And she adheres to it.
So is there, is there there's a first class bathroom? Does it have accoutrements in there? Is there a guy in there going like this?
Oh God! If they had the room for it to do international first class, it does. But I just love you're sitting there in your seat. You've already been served your mimosa, and you're just like,
I had no idea. I had no idea.
Yeah.
Now, when you sit there, I mean, you've been on television and radio for many, many years. You recognize sitting in the front, sitting up top?
I do, but I tell people a lot. I go, listen, this is me time. It's my family time. Let's just keep it going.
Keep it going.
I don't want to stop and hear about your life and how much you love me. Okay, I get enough.
And by the way, can you take this empty mimosa glass?
And stay out of my bathroom.
Howie, do you get to fly first class every so often?
I'm actually picked up and brought to the plane.
Are you a cart guy?
I happen
wait
to
until
be.
everyone's on. I don't want to maximize the time that I'm on the plane at all.
I happen to be living with a global services passenger.
Are you?
You know what that means?
Man.
So global services means that
You get to go to that suite beforehand.
you get to go to the suite,
that's nice.
Suite?
Yeah, the PS suite.
Yes.
The PS suite that has you get carted, driven across the tarmac.
Yep.
Over to the side hustle. The little side thing that goes up.
Oh yes.
Oh yeah. Yeah. But it's only because she basically flies for a living for work. But
Right.
You end up paying for it, but it is the best.
But now
Admirals clubs.
Let me go to the other side of the spectrum. I think it's Ryanair, but don't hold me to that. In the UK, they have a couple flights, across the English Channel and across over to Ireland, where they pitched for a while a standing section. Would you do that?
like the whole flight.
Yeah, the whole flight. It's a short puddle jumper. 30 minutes, 35 minutes.
I'll just stay.
It's like a bus or a subway. You just hold the pole and
Mike's like this. No, I'm fine. He's got his soda in his arm here. He's okay. He's got his arm wrapped around a pole while he's eating his chicken.
It works.
Oh man. Well, but if they have like hub tables or something like that, it's like a bar. Have you ever been in a double deck plane where you walk upstairs?
Yeah.
I never have.
Remember the old 747s?
What is that like?
That lounge is stupid awesome.
Really? You walk up, you stroll upstairs. Are there people sitting up there? Or is this
It's big cocktail lounge. There's seats up there as well. A little spiral staircase going to the top.
Really?
No way.
Yes.
Were you sitting in coach and use that restroom?
No.
Like if you walk through the first class restroom and then go to the second deck restroom, what does that make you?
The 747, the first time I flew on one, there's a lot of like red, purple, and beiges.
Oh yeah,
there's a lot of.
Yeah, I love the color.
Nice.
I love the color palette of airlines.
Yes.
Because there's a lot of burgundy.
A lot of burgundy. Exactly.
I never understood. Even the new ones, and they're all. I think blue and gold are the latest with star flecks coming.
Yeah.
There's always like on the side of an RV.
Yeah.
They have the same paint. They have the same
Exactly.
same paint job company they've had since 1965. Well, every RV in the country has got this. Mariah, or whatever the name of your RV is.
Right.
The Windward Ho.
The Traveler.
Yeah, it's either got a rust-colored swoosh with an orange swoosh or a brown swoosh.
Well, remember what American was? The big stainless steel, shiny.
Yes.
Oh yeah.
Now they're that.
American.
They're
it was like a big
prison gray.
It was like an Airstream trailer.
Yeah. Exactly.
Remember? So, Howie, were you alive when PSA was flying or TWA was flying or or a Pan Am.
Pan Am.
Western Airlines.
Were those twins out of North Carolina?
Yeah.
Is that what those companies
No,
with the Wright brothers?
No, that's who you and Devin met on the last time you were on a shoot. Those are the twins in North Carolina. Thank you. I'll be here all week. Thank you. They still call the show. Okay, so last of all, before you let you out of here, so there were seven companies we're not going to carry the market along. Are we going to see light at the end of the tunnel here this week?
Well, listen, this seems to be the event. I mean, it's forced the Fed probably to do a double rate cut in September, but until then, people are going to want their blood.
I'm not waiting until September.
I think you continue to see the tech sell-off for the foreseeable future with the broader market coming up, so you will see that dead cat bounce, but if you've been stuck in the tech growth names, they're going to have a little bit of a lull. Not forever. I think
Howie
they're
Font.
great companies.
Thanks, Crash. Ooh, shouldn't be talking about airlines and call them Crash. No, the only way to fly, Mike. Name the airline. It is the Big Biz Show. Wherever you watch, wherever you listen, as always, we appreciate you being along for the ride. Here in sunny Southern California, Costa, Greg Todoroff, our executive producer, and that guy right there, Sully. Let me tell you the sound you're about to hear. Yeah, that was the market opening today.
Ooh.
Frankly, 3% down after the Nikkei index was down 11 or 12% overnight. Europe was down 3%. Just a crazy day. And this is what it comes down. We start off with the jobs report in the U.S. It started off with a number of things in a global economy. The market's been ripening all year. We're at all-time highs in the last couple of weeks. And the problem is that the Fed has taken so long to pull interest rates back that they may have waited too long. So the good news is they'll probably pull interest rates back 0.5 percentage point, okay, for 50 basis points coming in September. But is it too little too late? So we're seeing a full-blown meltdown across the board. Every single market, you're talking about everything from the Russell 2000, Dow Jones, NASDAQ, S&P, small cap, micro cap, bulletin board, pink sheet stocks, everything in the market is down as a result of this. You heard Howie say. And I mean, look at Berkshire Hathaway on Saturday disclosed it sold half of its stake in Apple. Half of its stake in Apple.
What?
Okay, I mean, and they say it was tax purposes, but the bottom line is, boy, wasn't the timing interesting, right? I mean, the long story short is, this is just one of those things where I believe politically this is going to help the right versus the left, because this economy has gone to the point where now the market's not even doing good. The market was the saving grace. In any case, yeah.
So is it recession? I mean, are we?
You never know you're in a recession until you're out of recession. Two quarters of declining growth has been the definition of recession forever. So by those notions, we've been in a recession for a couple of years now, ever since this administration.
So what was the trigger? The jobs report?
I think it was a number of things. You had an unemployment report come in. There was an earnings report last week that looked kind of stinky. Look, the market runs on fear and greed. It's two emotions, okay? And what's happening here is we've got a fear-based thing. You'll watch what happens though in the next few days. You're not going to see a recovery, but you're going to see what's called a dead cat bounce. I mean, we saw a big drop today. Next couple of days, you're going to see a bounce again. I don't think this puts us into a bear market, but I think what's I think that recession. You're going to hear the word recession come up, and you're going to see investors putting some dry powder away just in case. And I think that's exactly what's
Well, thank God nothing's going on in the Middle East right now.
Yeah, exactly.
We can just focus on the stock market.
And we have an election. Hey, our good friend Christian Kanstrup, he is the CEO of a company called Evaxion. EVAX is their stock symbol. We've had Christian on a number of times. Really interesting company. We're going to be covering him on a regular basis. Clinical stage tech bio company based upon what's called an AI immunology platform. So they're saving and improving lives with AI immunology. And here he comes via Zoom to you right here on the Big Biz Show. Christian, how are you, sir? Rough day on Wall Street here in the States, as you've probably already seen, but you still have your head down working on saving lives. So talk to us again for the people who haven't seen you before, exactly what you guys are doing there at Evaxion.
Yeah, first of all, great to be back, Sully. And you can say rough day on Wall Street, but probably not as rough as was in Tokyo this early morning. So it's putting things in context. But what we do at Evaxion, that is saving and improving lives with AI immunology. Our purpose is to use artificial intelligence and machine learning to discover, develop, and design vaccines towards cancer and infectious diseases. I mean, the company here was founded in 2008, even before people were talking about AI, as a company focusing on using machine learning to decode the human immune system to develop novel therapies towards serious diseases. And that's what we have been working on developing and further improving ever since. And today, as you say, we are a clinical stage tech bio company. We have a clinical stage cancer pipeline of personalized cancer vaccines. We have a preclinical pipeline of novel vaccines towards various infectious diseases with high unmet need and where no vaccines are available today. So working on saving and improving lives, utilizing our quite unique, validated AI immunology platform. So that's in short what we're doing, Sully.
Hey, Christian, my question for you is when you talk about machine learning and you talk about your development for metastatic melanoma, can you describe kind of how that works from start to finish?
Yeah, I mean, what we have been working on is developing a highly sophisticated AI-based platform which, based upon a tumor sample for the individual patient, can identify exactly which are the elements that needs to go into a vaccine designed specifically for that patient. So you should look at it as we are utilizing the power of AI and big data to develop personalized vaccines specifically designed for the individual patient and thereby making them more effective. So that's the simple principle, taking the outset in the individual patient and developing a vaccine specifically designed for that patient.
Christian Kanstrup is the CEO of Evaxion, their ticker symbol EVAX. Christian, using AI, does it allow you to, I guess, cut down on the man hours it would take, maybe allow you guys to research farther, go farther with what you want to do with immunology if you weren't using it?
You can say the hope and also what we are working on proving is that we can do it cheaper, we can do it faster, and we can do it with lower risk. Of course, by utilizing AI, you can say that the development of a new vaccine, which if you use traditional methods, if you look at, for example, for a vaccine for infectious diseases, typically it takes 3 years to identify a vaccine target for infectious diseases. We can do that in just 24 hours.
Wow.
What our AI model also does is it ranks the output of the individual targets for the vaccines, and thereby we can select the ones that we expect to have the highest efficacy, and we can even discover targets you can't do with traditional approaches. So in essence, it's about being able to do it cheaper, faster, and with lower risk. And that's super important because even though traditional drug development have developed a lot, you can say we are not there yet where we can, by traditional methods, design and discover novel vaccines that are effective. So there's a significant unmet need, which we are aiming at addressing, utilizing AI, machine learning, and all the big amounts of biological data that's available today.
Hey, Christian, real quickly, before we get out of here, I want to talk about the Merck collaboration real quick, but is that one of the biggest pieces that's happening in the next 12 months with you folks?
Well, you can say we started collaborating with Merck on discovering and developing a novel vaccine for a infectious disease, a bacterial infectious disease. That is ongoing, and we are concluding on the first part of that during the second half of this year. What we also did see is that Merck joined us as shareholder and are our single biggest shareholder today. So I would say the combination of having Merck in as a shareholder and at the same time collaborating with them, that's of course an important thing for us. But we are also having 1 year phase 2 data coming out on our most advanced personalized cancer vaccine in metastatic melanoma here in the third quarter, which is also going to be super exciting.
Christian, thank you so much, pal. We'll talk to you next week. Christian Kanstrup is his name. EVAX is the stock symbol, of course, name of the company, Evaxion, EVAXION. You can go to evaxion.biotech.com. More big biz coming up. Stand by.
Loft 100 Studios, The Big Biz Show, our affiliates, and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any persons, or that investment in such securities would be profitable in general.
Given the nature of our company's profile and the lack of an active trading market for their securities, and investing is highly speculative and carries a high degree of risk. We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its host for the profile coverage.
3, 2, 1. From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stock if we are speaking about, interviewing, or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully. Duh.
And read the investor information available on the website.
On the Securities and Exchange Commission, SEC, at www.sec.
Or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
In over 175 countries, in all the ships at sea, on the American Forces Network, it is the Big Biz Show. To our brave men and women of the United States Armed Forces, for what you do, we always salute you. Costa, Greg Todorov, and Sully. Look away today. Just look away. Your screen is bleeding. You have to. I mean, there's days like this. You know, market is topped out in so many different areas, and when you see, like when I'm looking at my my app online here, and you see just the
glowing in red.
Oh boy, it's literally bleeding. And you know the issue is this: is that it's based upon fundamentals. Markets having a meltdown today. This is a snapshot in time. You have to sort of think back on during the Great Recession, when the Dow Jones hit down to, I can't remember, it was 46 or 64 or something like that. But it was. But if you look at it today, and you know, if you think to yourself, boy, what a bargain that was if we would have bought back then. You have to sort of think the same thing right now. If it was a bargain back during the Great Recession, it's a bargain now.
Yep.
Not suggesting that you know, just because something's cheap doesn't mean it's not going to get cheaper. I would say you have to wait. There's a saying called the trend is your friend. You have to wait till things start trending back up. I think you're going to see a bounce here in the next couple of days because you can't just lose this much market value. You know, we opened 3% down today, and there's been stops and there's been curbs and so on and so forth, as Howie was talking about earlier in the program, and that's to sort of keep us all at bay here. But we've been at all-time highs all year. For perspective, today's down market puts us back where we were in May. Put it that way. Okay, so we lost a month and a half worth of gains. Okay, so far. Or actually, let's say two and a half months worth of gains. But bottom line is, you know, big tech had a comeback, and 7 companies were never going to carry the entire market forever, which they have, and that's what's going on. Biotech sector is getting their butts kicked, and everything else is kind of, you know, going along with it. So this is a snapshot in time. This is the day you don't look at your market. Don't look at your 401k today. Yep. Just look away for the day. Joe LaRosa, good friend of the show, founder and CEO of a company called LaRosa Holdings Corporation. LRHC is the stock symbol, LRHC. You can go to joinlarosa.com. Really interesting company that's disrupting the real estate brokerage model, starting in Florida, now taking the world by storm. And he joins us here once again via Zoom. Joe, how are you, sir? Good to talk to you, man.
Hey, doing well. Appreciate you guys having me on.
Hey, listen, talk about, give us an update
kind of what's gone on this year with you guys, because you guys have made some pretty significant changes, even since when we met you in the beginning, with respect to some good news coming out, subscriptions, with respect to brokers signing up. Probably subscription is probably the wrong word, but people signing on with you. Talk about the entire picture for 2024 so far.
Yeah, listen, 2024 has been a great year for us. I know it's been a little bit of a kind of a slower market for a lot of other real estate folks, but in these down markets, the way our model is, we've actually been able to grow and be able to actually expand into multiple markets now. So we've actually had 11 acquisitions that we've actually done since our IPO closed back in October of last year. Our agent count is growing, so where most real estate companies are actually seeing a decrease in their agent count and decrease in volume. Our revenue numbers have been going up. Our agent count has been going up, in fact, in the month of June. And so far, July looks to be pretty much comparable to what June was. One of our best months in the history of La Rosa. It's because of the model that we have to offer, really offering agents an opportunity to really capture as much of their commission as possible.
Hey, Joe, I want to talk about when you and I talk about the word disrupt, like we did when we first met, what you're doing to disrupt the real estate industry. Be specific about that for folks who haven't seen you, because we picked up some new affiliates and actually moving more internationally for Bloomberg EU coming up in the weeks to come. And I want people to understand exactly what you mean by disruptive and how it changes things.
Yeah, so our main core business, again, is a real estate brokerage model. So we've always wanted to become the Netflix of real estate. So for many years, these broker-centric models would basically take 30 to 40% of an agent's commission. So we didn't invent the idea of offering 100% to commissions to agents. We actually found a way to disrupt it by adding a lot of value. So back in 2011, we had great success with that. In 2023, 2024, when we went public, we started then to introduce a revenue share model that has become very disruptive in today's real estate industry. So, with the revenue share model and offering 100% commission, we really stand out as a tremendous value proposition and value offer to agents. And that's why even in a slower market where you've seen less transactions closing, agents are wanting to find a way to keep more of their commission. So that's why we've been able to really become a disruptor in the real estate space, where, again, most real estate companies are seeing a decline in total volume, a decline in agent count. We're actually seeing the exact opposite.
Joe, we've never discussed this. What color blazer do your agents wear?
Well, listen, everyone's going to go off the leader, so it's very rarely that I'm actually wearing a blazer. So if we had to choose a color, I'd probably say blue.
You took a wheel, and it sounds like for your new agents and agents that you added a bunch more spokes to make them successful. Is that the way you can boil it down?
Yeah, absolutely. We wanted to really focus. My father always taught me years ago, you want to have multiple streams of income coming in. So we wanted to create an opportunity for agents to really earn revenue 7 different ways. So we really focus on being able to educate our agents on how to, grow a business within a business. And that's what we offer them here at La Rosa.
Hey, Joe, I want to talk about markets today, not specifically with respect to stock prices, but I want to talk about the fact that one of the reasons the market's, swooning today is just folks are thinking that the Fed took too long to reduce interest rates. Obviously, when the Fed reduces interest rates, it doesn't automatically affect the mortgage rate, because mortgage follows the long bond, but it's coming. In your opinion, because you're at the tip of the spear there, are we looking for better mortgage rates sooner than later now? Because everyone's talking about a 50 basis points to 0.75 basis points in September. What does that mean for you, and what does that mean for your projections with respect to the national real estate market and mortgages?
Yeah, great question and great point. I think there's a big wave coming. And so if you look at the last 30 to 45 days, we've seen obviously a slight decrease in mortgage rates. We're always going to follow the 10-year Treasury. And, it's been below 4% now for the last couple of days, which is great news for us. I think as you continue to see that number drop, you're going to see mortgage rates drop. So, once the Feds do cut rates, obviously that's going to have an impact. It's going to be a domino effect. And, I expect a very similar wave to what we saw after COVID. During COVID, everything kind of shut down. Everyone took a timeout. And then once things started to get going again, especially in markets like Florida and Texas, you saw a huge pent up demand get released. And I kind of expect the same thing to happen probably towards the later half of this year, going into 2025 for sure.
Joe, so that obviously the next question is, what does that do for you for the rest of the year? Do your plans change at all, or is it accelerate things? Because days like this obviously are tough to look at, but every single time we've had days like this in the past 15 years, it turns out to be actually something better, an opportunity in the weeks to come. Talk about what you're thinking about for the rest of the year now, based on what we're seeing with mortgage rates and what we're seeing with the market today.
No, listen, you know what? It's kind of ironic that we went public in some of these challenging times over the last 12 months, because when we launched our company, we launched in one of the greatest real estate recessions ever, I think, in the history of our country. So, look, I've always been focused on just positioning yourself now for the future. And that's what we've been very, very aggressive, with our acquisitions, increasing our agent count, being in the right place at the right time so that we're well positioned now. So when the market does turn, we're going to be able to receive, all of that demand that's going to get released back into the market. So, we're very excited for what's coming. We're obviously still focusing on our acquisitions. We have several more that are lined up between now and the end of the year.
Wow.
And because of days like today, yeah, absolutely, we're getting more opportunities kind of come across our desk, and we're taking a look at them and seeing kind of what's the right fit for the company moving forward.
Joe, I get emails from you every time you're on there. Last thing I'm going to ask you before you take off here is, I got people at 50 states emailing me wondering when you're going to be in 50 states. Is that sooner than later? Because I think they want to see you in places like California and Arizona, stuff like that.
Yeah, we're expanding. So, we have some big news coming out very, very soon. It's going to allow us to be able to go into now, I would say, twice as many states as we're currently in today. So we're very excited for what the second half of this year is going to, have for us.
Join LaRosa.com. Thanks, Joe. Appreciate it. We'll talk to you next week. We can get him in the studio here. At least I'm trying. Yes. Joe LaRosa, founder and CEO, LaRosa Holdings Corporation, LRHC, stock symbol LRHC. From the Loft 100 studios in beautiful Southern California, I call it the Large Financial Program. It's known, Mike's other show. It's known nationally and internationally as the Big Biz Show. There you go. I'm Costa. That is our executive producer, Greg Todoroff. Of course, the man behind the bar driving the ship, Sully. Again, don't look at your 401k today. It's not that day to check out the market, because this is one of those days where you saw finally bad news in the economy affect all-time highs in the stock market. This is bound to happen. And of course, this is yet a snapshot in time. Even with today's carnage, and you're already seeing, we're not as bad as we were earlier this morning, but even with today's carnage, it only brings us back to about where we were in May. So we're still up for the year. So a long story short, just look away today. It's one of those days where you just don't want to be staring at.
They take on many forms. Just look away.
If you sell today, all you're doing is locking in your losses. Had you sold in the last 10 times over the last 12 years, every time the market looked bleak like today, and then bought back in when you thought it was safe, your return on investment would be about 7%. Had you left your money in, it'd be closer to 12%. So, long story short, today's not the day to look at the market. You went to Disneyland
over
the weekend.
I did. Yeah. Oh man!
Is Disneyland
just smiling from ear to ear the whole time?
Speaking of bad flights,
it was only 1,000. Yeah, no flights of whiskey or tequila either.
Right.
Can I ask you, was it 1,000 degrees there? I mean, when it's 100 degrees in California, it's 110 in Disney.
I think it was 1,001.
Oh my gosh! I
spent a week there one day. So
yeah, exactly. Is there any self-sustainability there in terms of energy or anything like that?
No.
Because I was thinking Disneyland would be one of the first making their own energy or long-term energy storage for some of the rides and stuff. Any sign of that whatsoever? They just taking tickets and printing money.
Not that I could tell, but I had sweat in my eyes.
Yeah. And your fan wasn't.
And hate in his heart.
Yes. The important long duration energy storage is something we've been talking about with Eric Dresselhuys for quite a while now. Eric Dresselhuys, of course, CEO of ESS Inc. Their stock symbol GWACE. He joins us here on the Big Biz Show. I just heard, Eric, you and I were talking about this last time, that the global market predicted in the next 20 years for long-term or long-duration energy storage is $244 billion worldwide.
That's a lot of money.
That changes, but it wasn't like that when you first got into the business. That changes. Now, does that change anything for you plan-wise, or this is no news for you, is it?
Well, I don't think that it's news. In fact, that number seems a little low to me, so we'll have to work on that. I think that what is happening is that people around the world, governments, regulators, utilities, are now starting to do the math on what it's going to take to keep the system reliable, and this is a huge part of how we're going to get that done.
We saw, and you brought this up also, even a California agency a few months ago granting $30-50 million grants for long-duration energy storage. It brings us up to about mandates in municipalities and such. Talk about the future of that, because obviously people's eyes are being opened about it, and including bureaucracies. And I know the savings isn't immediate, but boy, if you look over the scope of a chart long term, it makes sense for more and more municipalities and more mandates to come your way. That can only breed good news for you. Give me a comment on that, would you?
Yeah, well, I think it's already happening. We had one that we announced, I think it was 2 weeks ago, with one of our customers, the Sacramento Municipal Utility District, and SMUD is one of the really progressive agencies delivering energy and driving the energy transition, and they got a $10 million grant. We're seeing 10 to 20, $50 million grants in a few cases. People recognize that this is important, and you've got to do something to help kind of, juice the market in the early days to get the volume. And as you get the volumes up, the costs fall, and, then all the magic happens, just like you saw in solar, wind, and frankly, most other markets non-related to energy that you've ever looked at.
Now that was not the same as the Make More in America initiative, correct? That was a different release, correct?
No, that's a different one. Yeah, so that's a $50 million. In fact, it's interesting. We're talking today. The folks from the EXIM Bank are on their way here, coming tomorrow, and we're doing a ribbon cutting on Wednesday, and that's a $50 million grant to us. To a loan, to a very low-cost loan to help us build out our manufacturing capability. And one of the things that's interesting about it is, because it's funded by XM, they're doing it because it's not just to help meet the U.S. domestic need for long-duration storage, but they've recognized that we're exporting about half of our products overseas. And that's, I think people just have forgotten that we used to do that a lot in America, build products and ship them all over the world. And so that's a big part of our story and a big part of our growth over the next few years.
Keep in mind, Exim Bank is the export-import bank of the United States. That's a pretty big deal to even have that kind of credibility sort of lauded upon you guys in the form of $50 million.
Eric, is the ultimate goal, like you mentioned, what was going on with SMUD, that it's word of mouth and everybody else sees it, and then the dominoes just start to fall automatically?
Yeah, that's a big part of it. Listen, most markets, and certainly energy, is amongst the most conservative markets out there. And so people are, everybody's from Missouri, right? Show me, I want to see it out there. Yeah. I want to see it working. And so the more we get out there, the more people see this work. We've got a ribbon cutting, we did a ribbon cutting with our friends at Burbank, Water and Power, just up the road from you guys, and now they're hosting a follow-on event because they're really eager to show it off. So it's this really interesting dynamic when you're working in new technology that once people get it and they see how it works and they see the value it creates, they kind of want to tell all their friends.
Hey, Eric, we brushed upon it a few weeks back when we talked to you about the Smarter E-Innovative award you guys got. Can you talk about that? Because I got a couple emails about that saying that we didn't spend enough time on it. That's a pretty big deal as well. Talk about, because you guys are, talk about exponential growth in terms of what you guys are accomplishing compared to when we were talking to you last year. Talk about the E-Innovation Award that you guys picked up just a few months ago.
Yeah, this is the E in this case is Europe, and so we. It's great. We're starting to get more and more recognition here in the U.S., but it's great to get recognition around the world. And we have a number of projects in Europe. And so this was one of 3 technologies and the only one in energy storage recognized as being kind of the game changers for making the energy transition in Europe happen. And it's been great for us. These awards like that get everybody back at their office going, wait a minute, who are those guys? And the phone's ringing off the hook.
Your strategic goals for the beginning of the year, you guys have set out to accomplish a number of things which you have. Anything changing for the rest of the year that you can share with us as the CEO of a public company?
Yeah, well, that's the condition. No, what we've shared with everybody is that we were growing more modestly in the first half of the year as we were getting some of our manufacturing capabilities ramped and getting some of our cost down initiatives implemented. So in the back half of the year, we'll keep doing more. We expect to grow quite a bit, and we've been very public about that. And then as we hit into 25, it just really becomes, we kind of cross over the point from a profitability perspective where we can hit the gas pedal.
Hey, Eric, I know you just landed. I know you're busy today with a million things. Thanks for taking the time with us. We'll talk to you next week. Eric Dresselhuys, GWH is that stock symbol, S Inc. Busy guy, and I'll tell you, I love to see that they're doing more and more than they even anticipated doing.
Well, if he's in Burbank, I mean, Anaheim is...
Well, I'm saying, if they did a ribbon company in Burbank,